Welcome to first of what hopefully will be a series of Hacking Finance talks between me and Sean. Sean Park, founder of Anthemis, David Galbraith, partner at Anthemis. And the idea here was to go a bit deeper from day-to-day investment into the spirit of what Hacking Finance was about, which was to get quite nerdy about finance and the internet. And really in the spirit of how Anthemis was created, which was as an ecosystem, as a different kind of company. And that different kind of company, very much built for the network age, plays into lots of the ideas about how we invest in things from the point of view of not just the internet and networks and the new economy, which is very much based on that, but the flows of information, capital, and energy through those networks. And so that in the spirit of some of what people might have read about what people are doing at the Santa Fe Institute and things like that, that's very much in the back of our minds in terms of what frames things at the highest level. So today, I thought we would maybe have a conversation around what's on everyone's mind, which is the wider sort of geopolitical issues of the world, inflation, deflation, markets, and how that plays into the fact that the internet has clearly moved into a position where it is geopolitical, where a lot of the geopolitical structures and stresses from inequality right through to relations between, let's say, the US, China, India, and Europe are played out through internet platforms. So maybe kick off with a sort of question, which is, we've been through a period of secular deflation, which never seems to end. Is it ever going to end? And what are the dynamics that are creating this sort of endless deflationary pressure?
Is that a question? I have no idea. Yeah. And actually, I was wondering, David, where are the two ferns? I thought we were going to be between two ferns. That was
totally. Yeah.
Maybe when we can get together in person, if that ever happens one day. I hear these vaccinations are going to, change the world. Yeah. I mean, I think, you and I have talked about this a lot before. Joking aside, there's a disclaimer of, I think it needs a lot of humility when you're talking about, macroeconomics like this. And, oftentimes when you read, economists, whether it's central bankers or bank economists or what have you, there's sort of an overconfidence bias, at least in the language that they use. But if you talk to them privately, oftentimes, they admit to, much unknown, much uncertainty. But for what it's worth, I think the root of it is, the root of what, how we got started at Anthemis in terms of our, the macro foundation for our thesis and the opportunity space that we thought it would create, which is this, fundamental secular transition from an industrial economy to an information economy. And a transition that is probably, I think this is something that only historians or economic historians will be able to sort of put a finger on in hindsight. But if I had to guess, I think it's a transition that we're probably thereabouts 20, 25 years into, or maybe 30 years into. Certainly the original catalyst was, the advent of Moore's law and ubiquitous microprocessors, and then building on I don't think that was sufficient. I would suggest that the real impetus was, again, late 90s, early 90s, with the construction of massive amounts of global bandwidth, both wired and wireless, and then on top of that layering 30 years of progress of Moore's law, cloud computing, and enormous compute and storage capacity. But if those are the technological underpinnings, and here I'm leaning a lot and drawing from and plagiarizing to some extent Carlota Perez's thesis about technological revolutions and financial capital. She talks about the 50 or 60-year cycles. I think this industrial to information age is actually one level up from that, which is something that happens very infrequently. The last paradigm shift of that order, I believe, would be, the shift from a feudal agrarian economy to the industrial economy, 200, 300, 400 years ago. And, as an aside, that also happened over a longer period of time than I believe, and again, we're in the middle of it, but then I believe that the transition from industrial to information economy or society will happen. And, so why that rabbit hole? Why is that important? Well, I think, again, building on a lot of the work that she's done, looking at these kind of transitions in the past, this affects everything. This affects, basically our whole society is organized, and over the last 300 years has, incrementally and incrementally optimized itself for the economic, social, and institutional paradigms of this industrial age. And there's a lot of inertia in that. I'd say mostly that inertia is probably good, but at times of discontinuities or significant phase transitions like the one that we're living in, that inertia suddenly goes from being, mostly benign, mostly a positive force to being, an impediment and a challenge.
And some of it certainly backs up some of what we've been looking at, which was, the question was, are we in the 1970s? Is this a sort of economic shift? Are we in the 1930s, like political chaos? The other two options were World War III or the pre-Reformation. And the one that we sort of, I think you and I have looked at and agree that there is some evidence to suggest this is a once in 500 year shift, and that it's not one of these cyclical transformations, is that the last time there was this simultaneous jolt and shifts in the way information flowed simultaneously with the way trade happened, with the way capital flowed, was with the discovery of the New World and the printing press.
Yeah.
And what was very interesting about that was you can literally plot places on the map that are both close to where the printing press was based and close to Atlantic ports where there was lots of trade with the New World. And those are the places where medieval guilds and trade fairs were replaced by capital markets and joint stock corporations. And so, for example, if you look at Lübeck and Hamburg, which are only 30 miles apart, but Lübeck is on the Baltic and Hamburg is on the Atlantic. Hamburg got rid of its guilds and trade fairs much earlier than Lübeck. And so it shifted. And the same thing happens with Seville, where Seville didn't, because although Seville was in an inland estuary to the Atlantic, it was too far away from the printing press.
Yeah.
But like you say, you have these sort of benign effects, but then obviously we see 100 years of conflict in Europe because of the Reformation.
Well, I think, yeah, absolutely. And I think I would tend to, I tend to agree. And you always have to be a bit cautious about this, because I think what's the expression, or there's a bias towards thinking the times that you're living in or living through are particularly important. And, but, with that disclaimer and with that front of mind, I think this is one level up from the sort of the 50, 60 year technological and institutional cycles that we've seen for the last 200-300 years. And it is more fundamental than that. And, to take your example, and the reason is that it wasn't just sort of economics. It wasn't the changes weren't even, confined to or even predominantly in one aspect of our civilization or society. They permeate every aspect. All the cards were thrown up in the air. And like, to take that example, I remember I gave a presentation in the, I don't know when, around 09, 10 or whatever, at the SWIFT conference. And I made this little video called The Financial Reformation, trying to use that metaphor. Metaphors are only as good as they seem, but you talked about commerce and the effects on commerce. You think of the effects on power and, civil society, and particularly in Europe. Obviously, this is European centric, but the Catholic Church, everyone knows a little bit about Martin Luther and the, the power of the printing press to, so that the church's word could become, the mass was translated into vernacular, and the power structures that the Catholic Church, just as an aside, the Catholic Church is it's a fascinating organization to study. If you're, whether you're religious or not, I think just as a, organizational science and what they constructed over, over hundreds of years and, even till today, anyhow, that's a bit of a rabbit hole. But the point being is that everything is up for grabs, and everything, all these things are the way our economies work, the way our institutions and our civil society works, even our culture. They're all, intricately intertwined. They're super complex adaptive systems. And when you have a fundamental change as important as the technological changes that we've seen at the end of the 20th century, it throws everything up for grabs. And then, I think a lot of people are talking about COVID, but COVID is just like sort of a random exogenous factor in some very, very, in some ways, maybe even, I don't want to say anyone wished for COVID, but sort of helpful, forgiving in the sense that it gives our societies and our civilization the air cover to maybe move a little bit more quickly.
Yeah, I mean, it certainly looks like it's been the equivalent of the pressure has built up on a fault line, and COVID is the sort of earthquake that allows the fault line to shift into play. But it's not all good news in the sense that, I don't know, we'll share a link with this, but Nikki Case, who did this fantastic video very simply explaining some of the effects of networks, and the fact that when you rewire society, as we have, you temporarily create new flows of information and capital, as we've said. And one of the effects when you rewire it, it hasn't settled down into an optimum state. So the Reformation, it took a long time for Europe to settle down. Now we're seeing a non-well configured part of the internet, arguably in terms of information flow, which favors lies over the truth for the sake of argument. i.e., truth is often complicated and needs, and it's one of those weird examples. Another thing that I'd say you and I have been talking about a long time, with these weird examples where you need friction in a system to make it not efficient, but better, operate better. And there are all sorts of these weird effects crop up from high frequency trading, where when the line of sight networks in the US outside of New York was slightly faster, and when it rained, it had to go underground, was slightly slower, and the liquidity in the markets increased when the speed of communication slowed, when the speed of potential trading slowed. And all these examples of putting in a bit of friction in the system, which we're seeing now happen with social networks, where we've seen, and again, COVID has actually accelerated the need for this, because we've seen social networks having to deal with some of the dystopian aspects. So one of them is, very specifically, Twitter now tells you, have you read the article before you retweet something? Have you, it forces you to possibly add a comment before you retweet. It's starting to add friction into the system to make sure that there's a higher quality of information transfer. And I think you and I both agree that this also applies to capital, that both information and capital need these points of friction to make the quality of trades better.
Well, absolutely. And I would even say, sort of more importantly, in this transitionary period, and I don't know how long it's going to last, I think I have very high conviction that it'll happen faster than, let's say, that last transition did, which, as you said, literally took 100 plus years, maybe even 200 years. And at a super high simplistic level, my sort of underlying hypothesis is just the speed at which information, capital, capital is information, flows is just so much faster today. And the scale of the world in terms of even just number of people, or whatever unit you want to use to count, is so much higher, that diffusion should be faster. Now, there's pluses and minuses to that. The plus is that this is a, by definition, if we're right about this hypothesis, a highly dangerous and turbulent time in these phase transitions. And so, the faster that you can get through that and out of it, in principle, the better. The downside of it, though, is that, again, maybe to use that metaphor of turbulence, maybe there's conservation of turbulence. So the turbulence is even, it's more concentrated in time, but in terms of amplitude, it's higher. There's a question. I don't want to sound sort of dark and gloomy, but there's a question of survivability. So, as you said, it's not all good news. Absolutely not. And I guess that's the interesting dichotomy, because we build Anthemis and we make investments on the premise that once you get on to the other side of that turbulence, or even navigating through that turbulence, there is a new, well, in our case, financial system, but I think it goes beyond that. That's just what we focus on. There's a new system that will be put in place, and the people and the companies that build that, will be very successful, and that will be helpful. It's a win-win. It's a non-zero sum game. It's, those will be the systems and the businesses and the business models that serve us well in this new paradigm.
And I think one of the things that we know now, what some of the characteristics of that new system are. We know that that industrial things were very hierarchical, because they had to be, because that's how you manufactured things,
and linear,
top down. And we know that these things are more like a network. And we know that specifically what that means is they're many to many, that the communication flows mean that anyone can communicate with anyone, that everyone is not in the industrial model, everyone can listen and only a few people can speak. And so
that was sort
in
of
this
like
new
my
model,
for the Catholic Church, it was the Pope or the priest spoke to the congregation, as opposed to the congregation be able to, read their scripture themselves, or, make up their own minds about what it meant.
Totally. And I think I mean, one of the things I've been obsessing about is the sort of death of enterprise sales, how that if you follow the line of thought about this, that really a lot of the word technology was used in investment, and it's misled a lot of people to think people are investing in what people sometimes now call deep tech. But most of what has been successful in the internet has nothing to do with technology. It's about applying modern distribution and modern business models and modern efficiency of leveraging networks, both in terms of network effects and virality, to commoditized technology. And that's why a bookshop becomes an everything shop and becomes an everything infrastructure for delivering everything. Yeah. You start with these quite banal things that have nothing much to do with technology. Amazon ends up owning cloud infrastructure. It's not a cloud infrastructure company starts owning everything else.
Well, the way, and this is probably belies my training as an engineer, chemist, material science. I also, as a sort of a visual metaphor, and an actual real chemists and scientists often call me out on this, and I say it's just a metaphor. But it's about energy barriers, right? So in the context of enterprise sales, a lot of the energy barrier before was, these were monolithic systems where there was a very, very high opportunity cost for the buyer to getting it right or wrong. And so, long cycles, super high barrier, and the whole enterprise sales process was about, getting over that energy barrier. You can see a future. I think we're in the middle right now too, so it's a little bit uncomfortable, but you can see a future where, there's almost no system, ironically, despite what Nadella and Benioff are trying to do at Microsoft and Salesforce as sort of icons of enterprise software, there's no system in the future that is monolithic, right? And it'll all be just pieces and services. And so again, I think it'll take a while. The technology is probably not quite there yet. So what I'm describing is a little bit utopian, but I'm highly convicted that it'll get there. And then it'll also take an adaptation on the other side. And I think it'll come from startups or like earlier, younger companies first, just because they don't have the sort of built-in cultural inertia to be able to adopt that and to say, hey, yeah, I'm just going to test this. This looks good. I'm going to test this out. I'm going to unplug this thing I was using and plug in this new thing. And, if it works, great, I'll scale it. If it doesn't, okay, I'm going to choose another thing. And to your point, then I think that gets enterprise sales goes away. And actually it's all about, choosing, it's about how do I position my API in this, super noisy universe of APIs, and I use mine instead of somebody else's.
And I think one of the things we've seen is that because people are able to distribute things, because everyone is a channel, everyone can talk, that the consumer markets have been more important than the enterprise markets. even for enterprises. And so one of the things I think Andreessen Horowitz absolutely nailed here, that it wasn't just a distribution advantage, it was a product advantage, i.e. that there was no friction, actually, although there was a lot of friction in the sales process with enterprise sales, there was none in terms of product development, i.e. the salesperson was incentivized to promise the earth.
Yeah.
And so you ended up with bloat and
to promise faster horses most of the time.
Precisely, yeah. So you ended up with faster horses, feature bloat, lack of elegance in product. And actually what we've seen is that consumer products are actually more professional, ironically, than the professional products. That they're still, a lot of the smartphone apps we're seeing are way better than the creativity tools for the professionals.
Well, that was most acute in the sort of the dawn of the, well, even before the iPhone or the, the smartphone, but like I remember in the early noughties where, I guess it was maybe ubiquity of, Apple and high-end Windows products in the home where, and it was just obvious, I think, to everyone. I don't know, maybe I'm not being lucid, but certainly everyone who was, in a professional class that could afford to buy a home computer, that, what you had at home was like way, way better than what you had to work with at work, right?
Yeah.
And there might have been some element like, I was in capital markets. So yeah, I had a lot more compute power at work, right? But the user interfaces were just horrendous, right?
And so maybe this is another aspect of modern organizations for networks, is that industrial age corporations were the sort of the archetype of them was they were faceless. They had lack of personality. And we saw that certainly with not just enterprise software, but small business software. It's almost like the bigger the organization, the more it was the lowest common denominator of everyone's personality. Yeah. And therefore real personality came with these highly personalized products for consumers.
Yeah, and there were, just in industrial science, the Taylor, it was all about, well, I guess, again, what was the apogee when everybody was, what's the ISO certification on, can't remember the number, but Six Sigma, the GE, Jack Welch's GE of the 1980s and 1990s, which was exception, find, isolate and eliminate every single exception, right? And, quite frankly, I think that was probably a local optimum. So it wasn't like it was like, that was just dumb. And with our brilliant hindsight, we see that was just dumb. I don't think at all. I think that was probably really smart in that context, that industrial age context where information costs were extremely high, but now, if you do that, that's where actually all the information is, right? Is in the exceptions.
And I think we saw definitely with the Warren Buffett model, which was definitely optimizing the supply of, which is when you have an industrial organization that's producing a physical thing, you need to optimize the supply.
Yeah. Actually, that just made me think of an example that's perfect. That maybe some of so FX trading, there was a moment and it flipped like literally within 6 months. So FX trading, retail flows. So retail meant not just individuals, but anything that was sort of below $1 million, let's say, like $1 million cross between $1 million in Deutschmarks or French francs, or then ECU euro or cable, which is sterling, was just like an anathema. It was mark up the prices as high as you can, not to rip the eyes out of the customer, because you didn't want that flow, because it was expensive to trade and you basically lose money on it, and it was a nightmare. And the operational cost of doing those size tickets was far exceeded any profitability that it might generate. And so what you wanted was the big corporate, General Electric or British Petroleum, that was buying or selling $50 million. That was the flow that you wanted. And then, it flipped when the technology was built. This was in the late 90s, early noughties. UBS was actually the first one to really nail it. But basically, and when I say technology, it wasn't, there was nothing particularly fancy. It was just making this all, and it's all zeros and ones anyways, right? So when people aren't moving wheelbarrows of money around, it's just ledger inputs. And all of a sudden it was, costless operationally to trade, any amount of, whether you were trading $1 billion or $1, it was pretty much the same thing, because it was all done by electronic systems. Then all of a sudden, nobody wanted the flow from BP and GE or whatever, because you would always be on the wrong side of it then, because the whole market would see it and it would be big enough to move the market. What you wanted was that retail flow, which was noisy, heterogeneous, had no signal in it from a trading point of view, except for sometimes at a very macro level, like over hours or days. And that in itself was useful. But on the moment, it was just random, right? It was like entropy. And that was what you wanted, because then you could extract not a rent, but like a consistent sort of, bid-ask profitability. And it was super interesting. It was literally the FX traders of the day, 6 months previously, you came in, oh, I've got, this small enterprise, a private bank that needs to buy some sterling. They would, oh God, and last thing they want to do, that's the only ticket I want to do.
And so I think you're right. The when things cost nothing, which we've seen happening on the supply of information or whatever, is the whole economy shifts around. So for forever, things have been supply constrained, and now they're demand constrained. People's attention is saturated, and I think because people's attention is saturated, that possibly gives a clue to what many people are thinking. Well, what's the leverage for ordinary people in this new world of massive inequality, of huge platforms, and people are able to capture network effects and create natural monopolies? What advantage have ordinary people got? And one of them is they have themselves, and they have the thing that's scarce, which is their attention. And so, in the same sense that the Ford-style mass manufacturing economy needed a middle class to be able to buy the products that they sold. Otherwise, why would you produce lots of things? You'd produce luxury goods like they did.
Yeah, I know, it was a classic Henry Ford. I need to create my customer.
So I think this is even more extreme now. Is the only business model, if you're a platform, is to service billions of people. And if your billions of people are starving, then, and because of the inequality that you've created through that dynamic, then it's automatically redressed, because you need these people's attention, and you need these people to be able to buy your own products. So I think it might happen through regulation, but we might see that the social pact, the collective bargaining, if you like, is people negotiating.
Well, I hope it happens through regulation, in the sense that, and actually I don't think it will, because I don't think regulation moves fast enough. And actually regulation is a consequence, or comes from an existing institutional framework, which needs to be changed. So I think, even, and this is not to say people are acting in bad faith or they're like trying to hold back. It's just like, even with all the best faith in the world, the institutions and the regulatory frameworks and mindsets that we have to work with, don't operate fast enough, or probably quite, and more importantly, probably not even in the right way to deal with this. And so the reason why, though, I say I hope it is, because the alternative, could be quite alarming, right? Where you have, you talked earlier, we sort of got off track, but talking about the dangers of this transition. I mean, this has been, again, COVID acting as perhaps an accelerant, or sort of a magnifying glass to expose underlying trends that were there, but were maybe a little bit less visible. The growth in inequality is the one that's like the elephant in the room. I mean, it's just, everybody knew it had been happening for the last 20 years. And, I would say that was a symptom, a downstream symptom to this transition from industrial to information age. But quite frankly, it doesn't matter, or at least in the first instance. All that matters is it's very, very real. And it's only getting worse. And, the thing that used to, still drives me nuts, because we're still operating on, although for the first time, literally, I think I wouldn't say it's mainstream or it's a common thinking, but there is a clear voice questioning some of the social economic shibboleths that we have, in terms of, like, for instance, GDP and inflation numbers.
Yep.
Is clear to anybody. Like, you don't have to be, super educated Harvard, economist. Anybody understands that there is a through cognitive dissonance, that inflation has not been, in the Western world, under wraps for the last 20 or 30 years, right? Yeah. The way it's calculated is based on an industrial economy, which is now irrelevant.
Yeah, exactly. This idea that that inflation is measuring TVs and not measuring houses and healthcare and education and all the things that matter.
And it's crazy that people just continue to parrot this. I mean, I had a giant rant. I was invited to a private equity retreat. A big private equity firm invited me to their retreat, their annual sort of offsite retreat, I don't know, 3 or 4 years ago. And one of the speakers, I was one of the speakers talking about innovation and venture, blah, blah, blah. And one of the other speakers was one of these macroeconomists. And I don't know, maybe I'd had too much to drink the night before or something, but they started on this, classic dry economist. This is what GDP is going to do. Inflation is going to do this. The Fed's going to do that. And I just lost it. I said, inflation, that's a meaningless fucking number. I mean, people... And everybody knows this. What
wages, definitely, whichever frame of reference you take versus assets versus manufactured goods, wages are the things that haven't moved relative to the overall.
Yeah, and the things that matter to people, and there's differences by country, but I think it's the things that matter to people: education, shelter, health. There's only been inflation, right?
Yeah. And you could argue that things might change. I mean, there's a possibility that the deflationary forces of the internet start to be reduced by, or the deflationary forces, as we say, of some things that have been reduced in price by the internet start to correct because there are natural frictions that are entering the system now in terms of information flow, and then and regulation, whatever. And then the second thing is that you could possibly imagine that China starts to have a huge middle class and starts to switch from being this massive producer for the rest of the world to starting consuming.
Although you've got, and this is a lower conviction here because I'm more ignorant of the facts on the ground, but you've got, just as China, I think you're right. I think it's heading in that direction. And so, that would be one input into the model. But just as that's happening, I think India is finally, and I say finally because this has been predicted every 5 years for the past 20 years, but is finally maybe hitting a point, not copy paste, but analogous to where China was 15 or 20 years ago. And it might take over as this giant deflationary, export force.
Or parts of the rest of Southeast Asia.
Yeah, exactly.
And these are places, or Indonesia, places with like 300, population of the US.
Yeah.
I mean, India's the thing that excites me most at the moment in terms of just we are seeing. I totally buy Ben Thompson's framing of what's happening in the internet as there is a US model, there is a European model, there is a Chinese model, and there is an Indian model, and the Indian model is opened up by some very specific structural changes that allow for this 1.3 billion people to suddenly create some enormous internet opportunities, and one of them is incredibly low broadband costs, and the fact that there is a telco with a very different model that's prepared now to partner with the platform companies at the exact time that the Chinese ones have been banned. So I think that's why we're seeing an enormous amount.
And I think there's a real, this is a bit cliche, but I think there's a real second mover advantage. The apocryphal example is always like mobile telephony versus fixed line telephony in, developing countries. But, take India in the financial economic space. There isn't for vast swaths of the population, we're talking 1 billion people plus, there is no legacy, right? So that does speed adoption, I think. And actually not only is there no legacy, there's no legacy mindset. I'll put up my hand and say I'm the first person that, despite my job being trying to live in the future and look at, what's changing and what business models, I am a victim of or a prisoner of my past as well. So there's a whole set of heuristics that, I tried very hard to be conscious of them all, but I know that it's impossible to be. So you're sort of trapped. And if you multiply that by millions of people, I think this is one of the biggest risks in the West, actually, is as you have these, and we've seen this in the past, when you have these macro transitions, the winners of the last paradigm are rarely the winners of the next one. Look at China. It's probably skipped it. They were the winners of the feudal agrarian period, because because the inertia of being successful, sort of holds them back compared.
One of the things that's very weird, having moved back to Europe from the US, is seeing how Europe has fantastic infrastructure. But when you see the model change, it's very worrying. There's this huge investment in basically obsolete infrastructure. So the US, which has got this sort of decayed infrastructure on one hand, but this incredibly dynamic society for producing new companies, I'm quite optimistic about that on one level. On the other level, Europe's got this sort of huge investment in, high-speed rail. Frankly, we could possibly replace high-speed rail with dedicated self-drive lanes on freeways. Who knows? But it's possible that Europe is caught in the worst of all possible worlds. There, we know that.
The one thing. Yeah. So I think it's Europe and the US are very different, but I think they have the net sum is they have similar challenges. So look, if you look at like the human condition, the social contract that exists in Europe is by accident, or not, not by, I think by accident in this context, but, is a better substrate upon which to sort of try to navigate this turbulence in terms of than the US, where it's like, it's absolutely frightening. It's almost feudal, where just whole swaths of society, and again, without going down too much of the rabbit hole of politics, I have a lot of empathy for some of the way this has been played out, where people are just left to their own devices. So I think that's very, very dangerous and turbulence. But on the other hand, you've got the sort of, it's maybe even this other side of the same coin, is that you've got this enormous inertia in Europe towards change, whereas in the US there's a little bit more there's probably more sense of adaptability and
it seems like together Europe and the US have the opposite halves of the right bits of the puzzle. Europe has the right social model in terms of universal health care and sort of social protections and things like that, but can it afford those if it doesn't generate the next Googles and Facebooks? The US has generated those things, but it hasn't got the social model that needs to ride this out in terms of effect.
Which reminds me, and I don't think we should go down this rabbit hole because we'll never get out, or maybe it's for another time, but I kind of got, been quiet. You and I used to talk a lot about this, and then we both sort of went quiet because it was kind of like a little bit sort of intellectual masturbation, super interesting, but what we can do about it is the whole way, what made me think about it is how we organize politically, how are societies and civilizations built. And right now, again, it's like that old thing, you ask a fish, how's the water? And he says, what's water? Well, the parallel today would be, how's the nation state, right? And like, what's the nation state? And, we forget, I think most people forget, or like, if I'm honest, most people never think about it, but the nation state is a construct, or it's a natural response to the industrial age, right? It emerged, in parallel as a optimal, or the least bad or local optimum in terms of political organization.
Well, for certain parts of the world, but you could argue that China has always been a nation state, or I don't know.
No, absolutely. So there is some. Well, you say for certain parts, so but even China has been sort of forced into that paradigm, right? The modern China, anyways, and then you've got Taiwan, China, and like look at it used to be colonialism prior, but now look at parts of the world, developing world, that are still suffering of the imposition of the nation state, which, by the way, I think, because those countries weren't at the same level, and for many of them still aren't, or until very, very recently actually hadn't joined the Industrial Revolution, these governance systems were completely anathema to what were essentially feudal agrarian societies. So you had,
but certainly going back to that original point about Hamburg versus Lübeck, one of the sort of less good aspects about Hamburg modernizing was it neglected its hinterland. So it became a very nice city, a bit like New York's a very nice city, but the reason why in the Rust Belt people are now antagonistic to the sort of rural versus city in the US is the hinterlands have been forgotten, because the hinterland becomes global.
Or I would say they've been forgotten, or the political system is not, well, it's not aligned. And, you see this in every country, and the one that's the most stark now, and, there's like literally, millions of hours of YouTube and blogs and articles about this polarization. Here's something provocative. In terms of creating a governable entity, it would probably make more sense to have one entity governing, I'm just San Francisco, Boston, New York, London, Paris, Berlin, Amsterdam, than, the country, and then a different entity governing, as you said, the hinterlands or whatever. My point there being, is not that that's what should happen, but there's a clear and present, I don't think it's undeniable now that the units, the nation state unit of how we govern is being tested and challenged, because the homogeneity of the governance, the area that it's governing, has shattered. It was never perfect. Don't get me wrong that France or the US was never monolithic, but for I think for 100 or 200 years, it was, that was probably a local optimum. Yeah, it was. You were mostly American or mostly French or mostly.
Yeah, but do you think the Chinese are having these existential angst discussions about nation states versus? I think they have a plan of like controlling resources through the Belt and Road Initiative all the way through to this incredible and building their own cities.
I think they are, though, and to some extent in it. Again, I real note of caution here. I don't know enough about China, but there, from what I can tell, there's an enormous priority on homogenization, right? Which then allows it to scale. So whether you have a country or a city that is 1 million people or 1 billion people, if they're all the same, in as many vectors or dimensions as possible, then it's easier to govern. And so again, what you see from a human rights point of view, a lot of the lens I look through that in is that the central government or the power there is like, the only way that we can be governed the way that we are and be successful is if we're homogenous.
Yeah.
Right?
And as you and I both agree, that's the fundamental argument for diversity is that it's resilient and it works. It's this fact that, yes, there are trade-offs with diversity, frankly, because eventually with diversity, you get diversity of opinion and you get conflict and you get people who don't agree with each other. But if you embrace that and you realize that people ultimately can get along, as they do in cities, in very heterogeneous and diverse environments, then those things survive for thousands of years.
Well, that cost, that friction, that cost, that sort of heat entropy, I equate that almost to like insurance, right? That's the insurance that gives you the resilience. So the resilience isn't for free, for sure, right? There's a cost, and it's that.
Yeah.
But the opposite is the brittle system, the anti-fragile system, which is super efficient, low cost, no waste, but enormously brittle. If the conditions change, the sort of environmental conditions change, there is the risk of sort of catastrophic failure that's unrecoverable.
And it seems like, as getting back to this idea of what modern organizations look like, given that they're probably complex adaptive systems that exist in networks that aren't designed in the way that industrial age ones were, that they probably have more of this insurance policy. They probably are more adaptable to changes in the environment, because we know that the trade-off of a tuned system is it basically adapted for this one fitness landscape, this one environment that never changes, in which case if the environment does change, it just falls apart, or does it have a lot of inefficiency so that if it does change, it can sort of move into a new part of the fitness landscape? And we know that probably the types of organization and the types of things that are all going to need this kind of insurance policy. And that goes all the way through to like my kids' education. When I look at it, it's like they don't have enough of this insurance policy.
No, absolutely.
Industrial age.
And I think what's key there is that what time horizon does that upon what are the natural or the sort of median is probably the right statistic, length of time between changes in the fitness landscape regime. So and what I would argue is that in the 20th century, they got, especially post-war, they got a bit long. And so nobody wanted to buy that insurance. It's like buying flood insurance and it never floods. You've lived for 40 years in the same house and it never floods. And then you say, well, I'm not going to buy this insurance anymore. And of course, the next year it floods. Whereas if it floods every 2 years, well, that's another problem in terms of the cost of that. And I think, that'll be an interesting debate for the coming decade or two, is at what speed it is. So we'll let's say organizations, or at what level in the hierarchy or in this the governance hierarchy will people feel like they need to be resilient and purchase that insurance? Is it the individual? Is it the company? Is it the nation state, the country, or a political construct? Because you're always going to have the risk of the free rider tragedy of the commons risk, right? And I think it's better to explicit that and then have a debate in society at whatever level, and then say, okay, we need to, somebody needs to pay for this.
And so, do you think that's why? I mean, on another level, the original internet platforms were, remember the idea, I think it was Tom Goodwin, I can't remember, the idea that the world's biggest car company owns no cars, world's biggest blah blah blah, and that's changing. Like, you're seeing Amazon employ 16,000 people a day or something. I can't remember what the number is. Yeah. You're seeing Netflix become the world's biggest producer of content. That the platforms which would have been too fragile if they didn't have large balance sheets. And so, is it the case that we're seeing inevitably these internet businesses now becoming much more heterogeneous, much more products, and much bigger balance sheets?
Yeah, but I would argue that there's I don't know if you've ever read it, Ron Cherno's biography of J.D. Rockefeller called Titan, which is basically an economic history of the mid to late 19th century and early 20th century, obviously through the lens of following Rockefeller and Standard Oil. But, the answer is Teddy Roosevelt. And I would say, history doesn't repeat, but it rhymes. That was the, people figuring out and hitting the sort of inflection point of the industrial age, and people being, in that case, Rockefeller, the Mellons, or JP Morgans of the world. And, going to, to its ultimate, sort of logical conclusion was these vast monopolies or oligopolies that, controlled everything. And I think, again, I'm not suggesting it's copy paste is exactly what's happening now or, will happen, but there is a lot of analogies. And, and actually in some ways the network effects, as they say, or the scale effects in an information economy, can be much bigger. So you've got the FANGs, or I can't remember what the latest acronym is, where they've got these increasing returns, ever increasing exponential returns to scale. And, that's where, I think there's going to need to be some sort of regulatory intervention. I'd actually, double down and say it's ultimately, because what I was saying before about regulation, it's actually a political intervention. It's like, what kind of society do we want to have? What kind of civilization do we want to have? And I don't want to sound flippant about this, but I hope to goodness that we have that before there is literally pitchforks in the streets, right? And again, I don't want to be flippant about that, but I think for the first time in my life, that is a non-trivial possibility.
And what does that look like? Because I know one of the things is, if you look at, people forget that Switzerland has a wealth tax, and that France arguably doesn't now, for example. So apart from on property. So you could argue that one of the things that middle class should embrace now is wealth tax. Frankly, it's coming, and it's and because the income is not going to cut it. There's these accrue
taxing income and capital gains is just stupid. We can talk about this in another time, because that's a whole subject on itself.
Okay, we'll skip that.
Exactly. No, but that's a really interesting, because it's important, right?
Yeah.
Because it's about,
and I think it's important that people get ahead of it, because otherwise it will be done on a populist agenda, and it won't actually protect middle classes, and it will not be collected properly. But I think it's
the short version, I think you want to tax stocks, not flows, right? In terms of now, historically, why it's been actually the opposite, I would argue, is because taxing stocks and not flows is much, much harder from just simply an operational logistical point of view. But I
and
would
you
also
could argue that the things that have deflated are the things that have flowed. And so the things that, like a TV being made in China and shipped somewhere else, whereas the assets, the things that have stayed put are the things that haven't been taxed.
Yeah, absolutely. And actually doing that is actually quite challenging, like from a just purely literally operational logistical point of view, because you need to put a value on everything. And then, and I would say historically, to the extent that it was actually impossible or completely impractical. And actually, if you look at the history of some of the countries like France and others that have wealth taxes, it was sort of a kludge, the way that they're especially with the very well, and it was only for individuals, right? It wasn't for corporations. And but anyhow, that's a great topic for a future, not between the ferns, right?
So we'll park that one. But I think, there's plenty more in terms of, I guess, the theme that we've been riffing on today is new types of organizational structure and how that plays out at the level of individuals, organizations, and countries ultimately, and cities, as you've mentioned. The thing that previous life as an architect most excites me about cities is the fact that they can now look very different, and that these organizations in a network age can start to ironically look much more like medieval cities did. Like, you don't need a grid because you never get lost, because everyone has a map everywhere they go. And so things like that in terms of the structural dynamics and opportunities. Is there anything that you think happens in terms of the financial services industry that makes you optimistic about sort of utopian view of it?
Yeah, I think it's really, the sort of out of our quiver of macro themes that we think about and invest in. It's really democratization, right? And the long curve of that is, I don't know if this was ever true, but there used to be this sort of narrative that, something was invented by NASA to help somebody go to the moon, and then 20 years later it was on your kitchen table or in your living room or what have you in terms of technology. I think, here the analog in financial services is that what today or yesterday was only available to a billionaire or multi-billionaire in terms of, in terms of the financial system working for them and invisibly, right? So in the case of, historically, why it was limited to a billionaire or multi-billionaire is because it essentially meant, you had 100 people or more working for you in doing that. Well, those 100 people, will eventually get compressed down into some, a bunch of APIs and some microchips, and and everybody, however, of any level of income, ideally the utopian view, anywhere in the world will have the financial system working to optimize their outcomes, whatever their context is, and that'll be different. But whereas today, that's not at all the case, right? It's
no, that's one of the things.
At best, it's sort of like a halfway neutral, facilitator, and usually at worst, it's actually much worse than that. It's it's a headwind working against people.
That's what excited me most about what was happening in sort of regtech, or I guess more like whatever the equivalent is in law, sort of robo law. You had all the people looking at smart contracts and all these complicated systems, and then there was this thing, do not pay, came around. I was like, well, do not pay. You could imagine do not pay having been this very targeted entry point about basically a robot contesting parking fines to being the thing that contests every form of bureaucracy on the planet. And basically
or navigates it, right? In that context of contesting, but like expand it. And then, to use my example, the wealthy person, at whatever level, they would have their accountant or lawyer or whatever do that for them.
And it may be that there's a phase change there in terms of the existing software model was everything had to be codified. And by definition, these highly bespoke things, which in order to codify them, you need to account for every edge case, and it just becomes absurdly complicated. That the machine learning approach to it, which is to sort of almost have the simultaneous view of every permutation possible and tune for that automatically, that creates a phase change in the ability to tackle these kinds of problems.
All right, well, you should probably wrap up for today.
Yeah, that was pretty good. So
We
next
solved
time,
what, like global governance, maybe. Well, didn't solve it. We brought it to people's attention.
Yeah.
Um,
okay, thank
and we've
you.
got a few things to follow up next time.
Speak to you next time, Sean.
All right. Thanks, David.
Cheers.
Thanks, everyone.